Alright, what's going on, guys? This is the trade breakdown for the 19th of September, and this was a Thursday. I was able to break my personal record on a live funded account today. I'm going to go over the trade breakdown that I took, and here's proof before we even start. You can see I took this on the E-mini NASDAQ micro. I took 10 contracts, and you guys can see my scales along the way. So this is what the chart was looking like uh, when I sat down. This is the 4 hour chart, and we have our 4 hour relative equal highs above here. And you can see that was taken before or over the London session. And so, in a bullish environment and a strong candle close like this at 2 a.m., I was expecting higher prices. Why? Because we still had our previous monthly high up here as a draw, and then even higher than that is our bearish weekly fair value gap. So, first thing I did was just kind of look at these lows or just yesterday's range. So when you are bullish and very bullish, you don't want to see the prior day's equilibrium of the range get tapped. And you can see that this is Wednesday, and here is Thursday's candle. If you look at the 1 hour, it's a little cleaner. Here is midnight, where Thursday begins, and here is yesterday's entire daily range after FOMC. And you can see that price never even gets close to the equilibrium of the range. So that was one sign that price was in a hurry to continue to offering buy side liquidity or buy side delivery. And this is what I continue to look at as well. So you see how this candle here at 1 a.m. digs into this small fair value gap and then displaces higher, closing above what? Down close candle, indicating what? That this down close candle should support price if we're going to continue higher. Same thing occurred, we pushed higher. And so that's why I wasn't really expecting this low to get broken. Now if I continue to play price, and this is where that we will stop. So there was high impact news at 8:30, and if we go into the 30-minute chart, you can see what occurs. So here's the 8:30 low gets ran, and then price takes off at the 9:30 open. We continue to spool higher here, and then this is where we ran into our first area of liquidity. So I did not chase this, and if you guys chase this price like this morning, just have this in your notes. Any kind of higher time frame area of liquidity gets ran, or if you, in this case, we are inside of this PD array, we are inside of this untapped hourly fair value gap order block, however you want to see it. I dragged this across my screen. I saw that we were rejecting this from this morning. This is at 9:30 right here. We rejected this, and it was also an hourly high. So you don't want to be longing in here until what? A form of liquidity gets ran. And of course, you can use this as well, but look at the reaction after this is taken, right? Smart money's failing to buy this low. As you can see, we just have straight down close candles on the way down. A one leg higher here, but you can see that we're not trusting this move because of what? The SMT between ES. This is where you just wait. You sit on your hands and you wait. You can see that price is very manipulated at this time, and there's a lot of heavy SMT, and I'm not buying any of this as well because of the SMT. So we have a minor pool of sell side liquidity, and I was waiting to see what would occur underneath this low. Once again, smart money's failing to buy this low. And what do we have? We have the low created at 907, and that gets taken here during what? The 950 to 1010 macro time. And if we look at the hourly time frame, what do we have? We have an hourly fair value gap. And when you're in a buy model, what do you want to see? You want to see down close candles, and PD rays act as what? Support, right? Taking us to at least this first hourly or 4 hour high, and then eventually our higher prices, our other targets. So I'm going to make this line red, and Now let's go back down into the lower time frame. So this here was just the sell-off, so price could run what? A pool liquidity, and then this red line is the low of that hourly fair value gap, and this is that same blue hourly fair value gap. What do we get? We have institutional order flow and drill here. ES is also inside of an hourly FEG. We're inside of a macro time, and then we get this. This is where, if you know exactly what you're looking for, this is your change in the state of delivery. And you can trust that this down close candle is going to act as support because of this right here. You don't have to be buying this if you don't want to, and I didn't. I was waiting for extra confirmation. But you can see that this candle is an open low after we get the change in the state of delivery. Rebalances what? This down close candle, and then continues to push higher with more displacement. And why can you trust this move? And you can see my entry here in a second instead of this one, because of two things: a sweep of liquidity, higher time frame pool of liquidity. You can look at this in any direction or on any time frame pretty much. There's two pools of liquidity here on the 15, 30 minute, however you want to see. You can say you guys can see that there is relative equal lows right below or right above this hourly FEG. So now going into the lower time frame, and also if you look at the micro contracts, there was actually SMT here, and that's also what gave me more confidence that the low risk buy was put in. So let me show you this real quick. Here's where the SMT occurred as well. So prices inside of this black line is that same hourly fair value gap. You can see that on M and Q it created a new low here, and ES failed to do so. So that is also why I was able to trust this low, and I honestly should have went long inside of this fair value gap. But I was still waiting for more confirmation, so I let price do its thing. And once I saw this, once again, there was SMT here. You can see this candle at 957. The low is broken on NQ, but not on ES. Price should not revisit this low before taking out what? At least our low. This is our lowest hanging fruit objective. And really, that's not even our main target. This is our main target, the 940 high, resting right below this other pool liquidity up here. So, SMT, fair value gap, low risk buy. And another thing, you guys can see that we're consolidating inside of this fair value gap. Consolidation can only lead to one thing, and that's expansion. Do you see any consolidation here on this move up and any buying in here? Look at the difference between this candle and then this impulse leg into this fair value gap, bearish fair value gap, with when the SMT was already occurring, right? The bearish SMT was occurring, ES was moving down, as you can see. ES was moving down while NQ is moving up. Do not trust this leg. We have a higher time frame PD array getting barely tapped into and displacing away. We have an open low candle right inside our time window, a pool of liquidity, two forms of liquidity being swept on the 15-minute time frame, SMT in the lower time frame. This fair value gap is acting as support. And what happens here? This is where this is technically where you get your change in the state of delivery at 953. But if you want to be safer, and that's what I did today, and you can still make a lot of money, this entire series of down close candles, you can wait for that to get closed above here, which happens at 10:03. Now, what happens when you have an order block created off another order block? You have a propulsion block. The propulsion block is what gives you those explosive moves. Now, this is where exactly where my eyes went, right here. This area right here is where I had a propulsion block, and what did we have? We had an inefficient area in price. Price has not came back inside of this volume imbalance and inside of this fair value gap. So once I saw price starting to stall from here, this is where I was anticipating my entry to come from. And also, if this was going to hold price lower, this order block right here should have held price. We shouldn't have been chopping from here. You guys can see And this is exactly what I mean. I'm going to delete this up here. You guys can see that once price with the SMT, right, we came lower and we pretty much immediately rejected this fair value gap and then went lower. Look what happens here. We hit the order block, we pause for a little bit, and then we consolidate, respecting this 1 minute fair value gap, displacing away. This is how I'm able to trust that this low should not be broken. Also, there's SMT here. And this area should hold because of what? We're back in a premium of this range. And you can see that this candle closed above the 50% as well. So that's why I was able to trust this fair value gap and this propulsion block here. And this low should not be broken. So all I did was wait for price to come back into a discount of this range. And you can see, what do we have? We have one low and another low stacked below what? An inefficient area of price in our propulsion block. And you can see, once again, what does price do? Makes another failure swing right below the fair value gap. That's how I knew that my area where I wanted to get filled was going to get tapped. We were also respecting this order block here. You can see the 50% was being respected. That's why I was anticipating this to get filled here. Same thing with ES. ES had these down close candles that it should be using as support if it was going to go higher. And we also have this volume imbalance here. So from swing low to swing high, price comes, boom, fills me right there. Look at the CE of the propulsion block, gets filled in a discount of this range. And as soon as I saw this candle, I knew it was on sides. Look at the candle, right? And look at the time. Right at the end of the 10-10 macro, open low candle into exactly where that we wanted to see price get support from. Once I saw this, I knew I was pretty much on sides. How do I know that price is giving me signs that I should stay in this trade? What do we have? We have a fair value gap that gets inversed. But more importantly, other than the inversion, that we get a change in the state of delivery once again. We get continuous closures above down close candles. And you can see price creates its fair value gap and never even comes back into that until actually doesn't come back at all. And this was TP1. I took off 4 contracts there just because I am on a My Funded Futures starter account, so the rules are a little bit different. I couldn't have like too big of a winning day, but I could have scaled maybe a little bit better. But that, of course, is something for my own endeavor. I took 2 off here. I took 2 more off up here at 79. And then I had, at that point, I had 2 contracts left. And as price was kind of chopping around here, my last target was this 4-hour high. And it was this 4-hour high right here. Yep. A little different on MNQ. Just, you can see right here that it was actually 20,140 even. This is 20,135.50. And look, how do you know it's a true breakout? This is exactly how you can anticipate, and when you're holding a trade, this is how you can understand that price is going to continue to spool higher. What do we have? Old highs, but more importantly, highs that were once areas that rejected price lower. So once this area gets reclaimed, right here, 1014, what does the high act as? Real support. This is your real support line. Look at the candle bodies. This one fails to even touch it. It creates what? There's a small little fair value gap in here. Fills in that imbalance. Uses the old high as what? Support. Real support. Look at the candle body. Refusing to even close inside of this smaller fair value gap and this high. What happens here again? Another fair value gap created. What do we have? Look at the candle bodies on the consummate encroachment of that gap. What do we have to the left? The high that was once an area of liquidity acting as what? Real support once again. What do we have over here? Our old hourly high. Look at the candle bodies. Using that as real support. And then price just spools and ends up hitting my take profit. Last take profit right there. I closed my one contract just up here randomly. Just because it was, I didn't want to, I guess I could have held from up here. But like I said, I can't have too big of a winning day because there's a 40% consistency rule. But That was my one trade of the day. Um, I just want to go over this one more time just to kind of cement it in your guys' brains, but this is what is really telling right here is the institutional order flow intraday. When you see price barely wick into an inefficiency and you're already expecting price to find support in this area, sweep of liquidity, institutional order flow intraday, displacement, immediate rebalance, price is chopping inside of a fair value gap. 1 minute SMT confirms that the low risk buy has been put in. Price retraces to what? Discount of the range inside of what? The macro time. Macros are going to be either rebalancing or reaching for inefficiencies. That's exactly what this did. And then price continues to spool higher. And then of course the SMT at the lower time on the micros also helped with confluence. But it's as simple as you want to make it, and it can get deeper as you go and find little hints that you can only make sense for yourself once you continue to see it in your own charts and have it play out in live price action. But sweep of liquidity into a higher time frame PD array, low risk buy put in, propulsion block, low risk buy once again, second stage accumulation, and then you get a part of the distribution. And you guys can see that I pretty much caught the top for the time being, kind of chopped around for a while, and then went higher end of day. But very, very happy with my trade today, and this was a personal record for me today. But I hope you guys enjoyed this video. If you have any questions, leave them down below in the comment section, and I will get back to you. Till next time, see you guys.